Following the collapse of many UK businesses such as Thomas Cook and Carillion, there's been a lack of government intervention in these cases, and the focus has been put on the accountancy profession and the accountancy industry, where the big four firms, for example, have come under scrutiny from MPs. Today, in Accountancy Age's first film panel debate, we will discuss trust in audit and technology and the many challenges facing the industry today. My name is Liana Rees, and with me today is Brian Palmer, who is tax policy expert at AAT, Steve Gale, who is head of audit at Crow, and James Poyser, who is CEO of Any Accounts. So first off, and this is probably the central question of the debate, do you believe that there's a lack of trust in audit right now? And if so, how can we solve it? Steve, I'm heading this question to you if you want to start.
Thank you, Liana. There's 2 points, I think, to address. First of all, what do we mean by trust? And then the second one is to think about what audit we are on about. The fact that companies collapse is a factor of a capitalist society. An audit is not there to prevent corporate failure. It is to ensure there is appropriate corporate reporting, and it can be an effective tool in making sure that companies are run well and investors can have trust in the financial reporting and the corporate reporting. But audit is not there fundamentally to stop companies collapsing. That is the role of the board of directors, who are there to run the company on behalf of the shareholders. So that's where the primary responsibility is. And also, these issues that we've been looking at recently have focused on what clearly are the largest companies in the country, which have most public exposure. But in terms of what audit is overall, it's a very tiny proportion of what goes on in the UK in terms of statutory audit. So I'm not convinced that trust in audit is broken per se. There are thousands and thousands of companies, many of whom are SMEs, who rely on their auditors and their trusted advisors for running their business. But clearly, there is an issue at the moment in aspects of the much larger companies and the audit environment there, where the trust is broken. Question, who is that really from investors? I don't know. I think there are mixed messages. The MPs have been the ones who've clearly been most vocal in this area. And I don't think anybody in the profession is disputing that things have reached a point where certain action is needed to restore some of the confidence. I'm not sure I'd say trust. I think that's a slightly different matter. But what those actions are a matter of some debate. I will have certain views. People from larger firms may have different views. But I think we would all probably agree at the moment that something needs to happen.
Perhaps it isn't trust, but it's the understanding of what an audit is about that is perhaps where some of this lies, and that is perhaps being fueled by MPs, also by press.
I think that's right. And audit is an interesting discipline to think of. It goes back to medieval times, if you really want to go back into the history lessons, but it was all to do with reporting to those who own the businesses who don't run the businesses. Yeah. And that's a really fundamental aspect of audit. But audit in the UK actually goes much wider than that. In terms of when I was talking about SME businesses and owner-managed businesses, where that relationship between the shareholders and the directors is actually very different because they may be one and the same people all the time. But you've also then got other facets of the audit industry, let's say not-for-profits, where actually that's a really important relationship between those who are running the charity and those who've got ultimate governance responsibility. Although you're not trying to look at those entities in the same way, commercial companies are obviously trying to build value for the shareholders, whether that's the capital value or whether it's profit accretion for dividends. When you've got a large non-for-profit, of course, it's rather difficult. People are interested in are the resources being managed in the right way that enables the charity to fulfil its charitable aims and spend the money properly that has been raised? But it's still a very important dynamic, that separation between the day-to-day management and those who've got governance oversight. But although the auditing standards are the same whether you are auditing the smallest company and the largest company, or the smallest charity and the largest charity, there are different aspects of the relationship that come into play.
So do you think then, consider these high-profile corporate failures, this kind of MPs on a warpath to break up audit. So are you confident in thinking that there is no more that the profession could have done, or do you think there is opportunity for the profession to do more?
I think there's always the opportunity to do more. I don't think anybody is pretending that in certain of the audits things could be done better. You only have to read the regulators' reports. Each of the larger audit firms, we have outside monitoring, we have our own internal monitoring, and you've only got to look at the results of those, whether it's from the FRC or whether it's from the QAD of the ICAW. They are revealing results that say, in their opinion, not as many audits are reaching the quality threshold as they would want. So clearly there is more that can be done in terms of improving quality. The interesting point in many of those is the findings aren't actually that the audit opinion ends up being incorrect, which of course is an interesting aspect of that. But I think there is more that the auditors can do in terms of communicating what they're doing, what they have found. There's an awful lot that goes on behind the scenes, auditors talking to management, auditors talking to wider board of directors, which actually doesn't get into the public domain that the shareholders see. All they see in the end is the 2 or 3 pages that it now takes to write an audit opinion. But there's an awful lot more depth of what auditors do than gets communicated in that way at the moment. I'm not sure whether it's PR or whether it's having to look at some more innovative ways of reporting. Whether it's allowing auditors the freedom to express more clearly where they have challenged management and required changes in financial statements to get them where they need to be. Some of which is to a degree visible, but much of that work actually remains quite hidden.
I'm just listening to some of this and I was thinking, going back to the tax industry in about 2011-12, there was a lot of noise that came out about multinationals and the way they approach tax. And a lot of it, we were getting the blame for, schemes and all the rest of it, when in reality, most of the scheme selling had already stopped in the last decade. So there was a bit of a bow wave of activity that was going on that we needed to kind of address. There was also a lot of it was misconception around the fact that legislation was all companies were doing, arranging their affairs in the way that legislation permitted. So we in the profession, what I'm really lumbering towards, is we in the profession understood that, and we were quite comfortable about the fact that things were being dealt with. But externally, people didn't understand that. And listening to some of what you're saying, I think there's a big danger that you're in the same environment where you understand exactly what an audit does, you understand what the requirements are, you draw up your correspondence, your letters, your engagement, everything is dealt with in the right way. Externally, people do not understand that at all. So it's not trust, it's a misunderstanding about what is required, and that's probably something that needs to be worked on. And I don't know how easy it is for people within the profession to do that, because it's you're safe with the environment that you're in, as we were in the tax world, and that's part of, I suppose, what we're looking at and talking about today, is how will that part get addressed.
Is that a challenge then for the professional bodies?
It's a challenge, isn't it, for all professional? But I think there's all sorts of stakeholders. So you've got professional bodies, you've got the MPs, you've got the FCA, soon to become the ARGA, and others. So you've got a whole set of different processes that all need to be done to try and get the alignment and the understanding correct. And
one particular hobby horse of mine at the moment is around the language we use on audit. You often hear it referred to as a product or a compliance service. And I think actually some of that is a very negative language to use. When you think about a product, if you were advising a company on making a product, what would you be doing? You'd be saying, how do I make this most efficiently? How can I make this at the lowest cost? How can I deliver it in that way? And actually, when you talk about something like that, you are not emphasising the value it brings. And all the time we talk about audit as a product. I think we actually do ourselves down as auditors and as professionals. Yes, we can look to do some of the things that are required to do in the audit as efficiently as possible. But what you're looking to do is carry out some of the processes that are required in an efficient manner, such that when you come to expressing the judgment and be dealing with those areas that are really judgmental and you need to bring your experience to bear, you've got deeper insight to do that, to bring that value. But all the time it's referred to as a product. The buyer of the product, you never think, oh, I need to pay more for this product. You need to think, I need to be paying less for this because you can be more efficient. It's not a product we are selling, it is a service. It's providing a valuable service. And I think there's been pressure on audit prices for many, many years because some of it, I think, goes around that, what I would regard as negative language. And if auditors are going to be required to really be firmer sometimes in their judgment, to be making sure they're using the appropriate scepticism, bringing that appropriate challenge, then actually that comes not really through making something as efficient as possible. That's actually giving auditors time and space to understand and to bring that challenge to management. That is a value, and suddenly trying to put that into a product and lower the price, to me, seems incompatible with what it needs to happen if this is an issue of trust and integrity and needing to demonstrate what it is that auditors are doing.
So you're saying that there sounds like there's a disconnect between those responsible for appointing and managing the auditors and the ultimate benefactors from the advice of the auditor. So who is it who's going to sort these two things out, align them, and make sure that the right instructions, appointments, and relationship with the auditor is managed in such a way that organisation and those stakeholders can extract the best value from the auditor? I
think that's a really interesting question. So let's ignore the SME, the owner-managed business, because they are one and the same, that bodies. So it is a challenge, isn't it, that you are appointed to report to the shareholders, and there might be an audit committee there that looks at the appointment. But day to day, you are dealing with management, and actually the audit committee authorises the directors to set their remuneration. So who is the client? And actually that's something I think the profession has struggled with, because we often refer to audit clients. There's been a bit of a narrative, you might have noticed recently, firms tending not to refer to audit clients now, but to refer to the entities that we audit. Because the client is out there, the client are the shareholders, the group there, not the CFO or the finance director who you're dealing with day to day, and who actually pays your fees. Because actually, where as an auditor should your allegiance be to? Sure, you've got to build a relationship and you've got to have a working relationship. But all the time, our job as auditors is not to do what the FD wants or get to the place that the FD thinks the FD wants to get to. It's got to be bearing in mind that our duty, our obligation is to the shareholders of the body.
So you're talking about, so the statement you made before is about moving audits away from this kind of this product compliance type mentality into what's the additional insight that an auditor can bring on top of that. And and I think about that, and is that the kind of conversation that an auditor would feel comfortable having with a CFO because you speak the same language, versus going to shareholders, institutional investors, and having that? Because if you're saying that they are your ultimate benefactor and customer, are auditors in the right mindset to have the right conversations with those people for them to value you in such a way that it then moves away from being a compliance product?
So actually this is where I think the role of the audit committee is fundamental. They are there essentially as you might argue, as the shareholders' representatives. Yes, they are directors on the board, but they're the independents, they're the non-executives. And it is interesting in the proposals coming from government now, and what will be the new regulator to actually strengthen some of that regulation and on audit committees and how they need to be delivering. So I think the role of the audit committee is important there. I think the auditors at times have got to be stronger at standing up and recognising client is not the people who pay my bills. The client is the other.
It takes us back to what you said at the beginning about audit coming back from the medieval times. It was always really about assuring the owner that the business was being run appropriately.
Yes.
And so nothing's really changed. It's just a modern context. You mentioned about the audit committee, and one of the things that in my mind is that it'll largely be made up with non-executive directors, and non-executive director recruiters always struggle to get good audit committee people. So one of the recommendations that come out is to beef up the audit committee. So how is that recommendation actually going to work in practice?
The role of an NED these days, I don't think people leap into it perhaps with the same enthusiasm that might have been the case 20 years ago, because I think actually people realise it doesn't matter whether you're executive or non-executive. Under UK company law, you are
on the hook.
Yeah, absolutely. There's no distinction in terms of liability. You are there. So actually, my feeling is that non-execs don't leap into this lightly. I think absolutely sometimes you've got to match the right skills of making sure your audit committee, your non-executives have got the right skills. It might well be in a sector and a deep knowledge of what is going on. It might be, certainly for an audit committee chair, they are supposed to have a good understanding of finances and what that role is going to entail. Increasingly, audit committees have got more of a risk insight as well as just pure audit committee. So I think there may well be challenges in getting the appropriate talent there, but actually I think it exists. Whether there is sufficient talent getting through to those audit committees is another question.
And going back to the lack of trust in the audit industry, you say it's more like a decrease in confidence and that people view it as a product. Do you think it's the government's role to change that?
Government has a role to play, though I'm not sure it's entirely government's role to fix it completely. After all, it's government that brings forward the legislation. The Competition and Markets Authority has put through some recommendations which the government is consulting on. And so Donald Bryden will be reporting on his review into the quality and effectiveness of the audit market, which was focused on the FTSE 350 in the middle of January. So it will be interesting to see what comes out of his review and the recommendations. And of course, we're now clearly in a time when we have a general election looming. So whether the appetite of government to press forward with these reforms with the appetite that they were showing beforehand, we will have to wait and see. Personally, I hope they do. We haven't been here before in terms of looking at the problems in audit and nothing has happened. My feeling is actually the profession is ready and prepared for some change, and I think the time is right for some.
And one of the suggestions made by the CMA was a breakup of the Big Four. Do you think that would help?
I think there are some arguments for that. I think there are some arguments against, and one of the challenges I see is that's all very well addressing that in the UK, but given the all type of audits that are under scrutiny are large multinational audits, I question how a bit of legislation that applies to the UK firm of the Big Four networks really will have effect when that won't apply to the rest of their network members across the world. So it feels as though we're looking at a little bit UK centric, and I'm not quite sure how that would really play out to have an effect for large global corporations.
bit that intrigued me out of what's coming to CMA was the part about dual audits. And so therefore, one of the big four working alongside someone in the next tier. And I was trying to work out how that would work in my head. And as I was starting to think that through, one of the things that came to my mind was the fact that all you're then going to get is a sort of secondary tier of reasonably large organisations that are going to work alongside them. Do you see that working differently than the way an artificial construct, and when you start putting constructs in to deal with one thing, half the time you create a new set of issues afterwards?
So joint audit is a concept that exists, and if you go to France, you'll find that for 40 years, companies that are required to prepare consolidated accounts in France are required to have a joint audit. It's not something which is routinely used in the UK. There are arguments for and against it. What is interesting about the CMA's proposal, to me, is they are clearly seeing it as an instrument to get more of the audit firms involved in the FTSE 350 audits, because at the moment, 90-something percent, 95% of the FTSE 350 audits are undertaken by Big Four firms.
Yeah.
And that's not because there is an unwillingness of a number of the other firms to be appointed in that area, but there does seem to be an unwillingness by audit committees to appoint those firms. And many times people will say, well, you've got the choice here, Big Four firm, medium-sized firm, smaller firm. Nobody's going to criticise you for appointing the Big Four firm in that circumstance. And we do have to acknowledge the Big Four, both in the UK and if you look at globally in the size of networks, they are larger. They are larger to some degree. Does that give you greater resources to be able to use? Yes, at times. And do they have greater, wider sector experience? Certainly in a number of areas, that's absolutely true. But actually there are, I know, a number of companies in the FTSE 350 and the rest of the premium list that my firm would be happy to audit. That certainly a number of the other mid-tier firms would be very happy to audit, and actually we've seen some movement on that in the last few weeks, if you read the press. But we haven't seen it happen over the years, even with the mandatory rotation of audit firms coming in through the 2016 changes to EU law. When you look at the statistics of Big Four moving to the mid-tier in terms of auditors, it hasn't happened a great deal. So what the CMA have done in being quite clever, in my view, is because they're not saying this is the thing about audit quality per se, because they said actually you have a choice. Their recommendation is you either appoint a joint auditor, so a Big Four firm and a non-Big Four firm, or you can just appoint a non-Big Four firm and not have a joint audit. So that to me says it's not one about quality as the drive, although the quality absolutely has to be there, but it is about opening up the market, because I think a lot of people would agree it would be good to have more than 4 audit firms who are auditing the majority, that vast majority of the FTSE 350.
Coming back to my opening point, which is all around that, was, do you think then it will just create a second tier of the next sort of, 10 firms that will be kind of geared up to handle the other ones?
Well, I think that might be right, and I'm not sure I would think that's a bad thing, on the grounds that, there is the risk profile of dealing with the large public interest entities and the type of scrutiny and the regulatory environment operating in. I'm sure not all audit firms would like to do that, because actually you do need different skills, different degree of investment. But I think, do people want to see more than 4 firms in that market? Yes. How many that should be at the end is a different question.
Sure. Actually, that speaks to a very good point, doesn't it? Because there used to be a concern that if you've got an auditor who doesn't really specialise in an area, who ends up with one big client, that's not a good place to be either.
Yeah, absolutely.
But
I think that's absolutely right, and it is interesting. The FRC published a paper, Developments in Audit, earlier this month, where they were looking at the results of their reviews from the audit quality review team, and making their comments about where they think actually just overall the profession needs to up its game in terms of audit quality. But there were some very directed points at certain individual firms, but then also the firms outside those 6 or 7 firms that they look at on an annual basis, and where they're saying, look, you need to do things better here. So I think no audit firm who is looking to get into this market is going to be doing it without a considerable degree of thought and the need for investment, whether that's in people, skills, technology, or whatever. So it's I think we will end up with a greater number of firms in there. How big that that field will be, I think only time will tell over the next few years.
So moving towards the topic of technology, do you think that technology can help gain that trust again, or do you think the opposite, that it's actually that human side of things, that is human side in accountancy or audit, that helps bring that trust?
To what extent does technology bring trust? Because, we're having this debate about technology can deliver something, and it's the value of the profession that goes on top of that. So I don't know to what extent technology can increase trust. I guess it's going to increase things like transparency, the accessibility of the data, be that in practice or audit, and whether that itself is a means in the end to drive trust.
Sometimes there's been a naive belief that technology does, can be totally reliable, but we're hearing more and more about that. It really depends whether there's some sort of bias accidentally built into it. So it's not kind of simple as that. It's an amalgamation of the two, isn't it? Technology should, if used properly, be a tool for the auditor or for the accountant, the tax advisor. They're basically sitting there on the margins, the interface between the end customer and technology to do the interpretation. So technology has its place. If it's done correctly, it frees people up. And we're having a little chat just now off camera about the fact that really, if you look all through our working life, technology has been repositioning where we have come, where we as individuals work, and really in the last 5 years that are coming into quite sharp focus, and that we are kind of, a lot of compliance activity now is being dealt with by technology. Has that led to kind of a reduction in the number of accountants around? No, I think it's actually probably led to an increase, because we're focusing on the added value side. Technology on its own doesn't improve trust. It's a combination of man and machine, isn't it?
I guess it's one of the things is that it has the opportunity to give you more transparency and justification for and the rationale for the decisions or recommendations that have been made. However, there's 2 things to that. One, you've got to have trust in the technology and the results that the technology is bringing. So who is essentially auditing the technology? That's only going to get harder. So if we talk about kind of technology today, we think about AI and automation, this wonderful new world. At the moment, there's not a huge amount of real AI out there. There's just a lot of very fast rule processing. And that is it is very easy for somebody to audit, which is, here's a set of rules that govern a decision. Has that been mapped properly into this piece of technology? I'll check the inputs, I'll check the outputs. And when we think about the application of artificial intelligence for these jobs, for crunching data for us, by virtue of the fact that if you can express something as rules, it is just that. It is rules. It doesn't require artificial intelligence.
No.
If it requires some kind of magic judgment, that is artificial intelligence. And by virtue of that, that happens inside a closed black box. And you cannot peer inside a piece of AI and understand truly why it's making its decisions, in the same way that we can't lift up our heads, take a look at our brains and understand why we're making these decisions.
So is there much real AI in there? And if there is there much in, say, audit or in tax?
So machine learning is a strand of artificial intelligence. And machine learning is basically, you will train a system with a set of inputs, and it will look at those inputs and it will try and deduce for itself what the rules are governing the inputs and the outputs.
It'll amend what you say. It'll amend the algorithms or whatever.
Absolutely.
That's the bit.
And that's what machine learning's doing. But it's doing it with a huge amount of data and coming up with a very, very complex means to make the decision, which, for machine learning to be truly of value, it should be beyond our ability to understand how to make a decision, because otherwise you are just using a piece of software to help you create a decision tree quicker, and that's not true machine learning. So how on earth do we get to this point where we trust a black box to make decisions when we don't fully understand how it's made the decisions? And you may well disagree with it, but what happens when it's right and you're wrong?
Yes. And I think the interesting thing is, if we think about where a lot of accountants will be involved, which I mentioned SMEs and small managed businesses and entrepreneurial business. Actually, if you're interacting with the business owners and the business growers there, they may want some help in the decision, and they may say, "What do you think?" Say what you think. But they can say to you, "Why do you think that? What is it about your experience and knowledge that says that's what your decision?" And you can illustrate. Well, unless I'm missing something, the machine is not yet at the position where it can say, "This is the reason why I've learned from all over the data I've looked at why that is the right thing to do." You can, and they can ask you, and you can scenario, and you can say, "In my experience, I've seen this, I've seen others do something similar." There is something about this human bit of interaction, the questioning, the responding, which I find quite difficult to see in for the entrepreneurial businesses, the SMEs, that bit is going to be replaced anytime soon. I'm sure the knowledge we can get from technology that allows us as the advisors to have greater insight and to perhaps arm the business owner with some more information with which they want to make the decision. But do you see that human interaction piece?
Yes. Yeah, I absolutely understand where you're coming from. And this is where, so I'm a very passionate technologist. There aren't enough superlatives in the world to talk about how much I love technology. But I'm also a rational thinker and think with a business hat on. My point is when people say, "Oh, technology could never do this." My kind of standard point is, well, they can drive cars, and you need to understand just how cognitively complex it is to drive a car on an archaic road system. It's a tough thing. So if a computer can do that, most of the problems that we face are going to be achievable for that machine to deliver. But then it comes down to the business case and why you would do it. Because you wouldn't build a very complicated piece of technology to solve one problem once, because the business case wouldn't stack up for it. You're going to go after that 80%, which is how can we build a piece of technology that can very quickly solve and apply machine learning to solve the 80% of the problems. And the 20% that's left over, which is the stuff that's complicated, requires real insight, expertise, whatever it may be, the stuff that you just wouldn't see the business case for building technology for, that's the stuff that's going to be left over for the advisors. And I imagine in audit, it would be the ingesting millions of data points from a global organisation, and my God, you want the computer to do that for you. You want it to do all that work over there. Let them do that, and the bit that's left over, where it goes, "This looks odd, but I don't know why." That's the bit where you can come along, use your experience, your insight, to take a look at that, come at the conclusions, make your recommendations to clients. That's the appeal of technology. It's always pushing us to improve and do things better, more efficiently. But I think it's the question there, particularly when I think about the application of artificial intelligence, machine learning, this technology in practice, particularly in SME, where I'm quite interested in. So we've got 25% of clients who don't have accountants, 50% who are using accountants for compliance work, 25% who are using accountants for advisory work. And you look at the role of technology, and it's that middle 50% where you can see actually it's not that far away that technology is going to be able to deliver the same service that an accountant who is just delivering compliance is going to be able to. Whether the consumer is ready for that or not, whether it comes down to the individual business owner, whether they'll put their faith in a computer or whether they'd rather have somebody to say, "I've done your compliance and I'll sign a piece of paper for you." But the number of people who are only willing to trust an accountant is going to diminish over time as the next generation of business owners come along who are comfortable with technology, and not only with that, they're probably more comfortable with technology than they are with people when it comes to cynicism and the reputation and the ability to do things correctly. I think a lot of people coming through these days would have greater faith in an automated bookkeeping system than paying somebody minimum wage to sit there and hack away their transactions.
It's interesting. So we've talked about the word trust. I mean, the word scepticism is of course high on the agenda for auditors. And I was just thinking, yes, you trust in person or the machine, you know, who are you more skeptical about? You know, the professional advisor with X years experience who's been recommended to you, or actually someone said, look, actually you don't need them, here's the technology solution, you know. And are we skeptical about that, or are we willing to trust, hey, computer says yes, must be fine?
Yes.
So I think it's an interesting that's an interesting area to consider as to where do we put our trust, and how do we retain our skepticism, which is important.
Yeah. And I think the guiding light should be, I like to distill these things into rules, and you think, right, if you sit in the profession, let's just assume that people, clients are only ever going to trust the machines more and more and more. So let's just state that is a given. So then you've got to think, as a professional, as an advisor, where do you sit in this new world where more and more faith is put in the machine? And then you've then got to figure out, what is it that you're going to be famous for? We spoke about this earlier with audit. So how do you move audit away from being a compliance product into somebody who's then providing tangible insights to audit committees? And it should be the same for accountants in practice as well, is that the technology is doing all that heavy lifting, and then the accountant is then saying, right, that's done all that for you. Now I'm going to provide my insight for you to help you to achieve your goals.
Well, technology has been more and more releasing people from the mundane to focus on what we used to call added value, isn't it? Sort of aspect. And that's part of the challenge for the audit profession is kind of building that added value side. This isn't still, we said it, or I said it earlier on, it's not once and done. There will be ongoing sort of challenges, but we keep moving up the sort of the value curve.
And that's going to start impacting into tax as well, of course. It's not because when we've seen the digitisation of tax, we real-time reporting on payroll came some time ago. We're looking at making tax digital.
My favourite subject.
Well, so we talk about technology affecting the audit business in other areas. I mean, how do you see that impacting actually the role of what you might call the tax professional going forward?
I mean, I see it's going to impact very heavily. If we're going to talk about making tax digital, that was announced as by HMRC in 2015. At the time, a lot of professionals were absolutely horrified by the thought. And then, around about 2017, I'm talking to room full of accountants, and you say, this is because we're starting to get more of an understanding of what it really would look like. And you're listening to some say, how do you operate your practice? Oh, we do this, we use bank streaming, we use receipt bank, we produce quarterly reports for our clients. So, do you know what? You're already working in that way. So really, we are already on that journey as accountants. The ones coming in now, or certainly 5 years on from here, will look back and say, "What? You used to do it like that. This is the way to go forward." So we are right on the edge of a major change in tax. Again, back down to freeing people up from the mundane, from dealing with the compliance, to more or less, working on the added value side. And it's that bit you mentioned earlier on about real time that will make the difference in the profession.
Yeah, absolutely. I think we're probably one of the few firms that got very excited when the MTD white paper came out. We were practically skipping down the corridor to our office because it was such, it was a visionary piece of work. And to talk what was in it, it was fantastic because it kind of gave us validation because we run a technology company and an accountancy firm, and we said, wouldn't it be great if ... And a lot of these things came out in the white paper, so much excitement, and then over time that has just got beaten away, predominantly by the profession saying, actually, I don't think we can do this, it's not realistic, think about the customers. And then you think about MTD for VAT, the bridging, there's this thing where to allow that, where actually you can carry on using your Excel spreadsheets because we'll do this thing in the middle. And it's like, come on, let's embrace what it means to be part of a society that's got a modern digital taxation system. And the value to the client is that real-time aspect. And that's the core of what we've done for a long time.
And it's interesting because you just said something, or your little story you were telling there reminded me when I was talking to accountants. I used to run an accountancy practice for 25 years. And do you know what? Gave me a good living, nice staff, didn't really like my fire. And then when I talk about MTD, I said this to people, I realised what it was. I didn't really enjoy it, but accountancy. And accountancy was all about, for most of us, was compliance. It was rear view. It was looking back at last year. You were sitting in front of a client about 6-7 months after the end of the financial year. You couldn't tell them anything about that year. They probably didn't already know.
Yeah.
It was too late to affect that year, possibly too late to affect most of the next year.
Yes.
You were then telling them what their tax liability was going to be in January. And if they hadn't listened to you properly and the profits increased, they had the double whammy of an increased payment on account at the same time.
Yeah.
You watch the colour drain from their face and you give them a bill. Is that really, is that where you want to be?
Yeah.
MTD moves you, or not MTD, it's about cloud-based computing, it's about where you are now, puts you in a position where you can actually be dealing with stuff in more or less real time. The compliance bit drops out the bottom.
Yes.
And you can tell people things at a time when they can increase their profitability within the year. Do you know what? If they pay a bit more tax, it's only because they've made more money. And isn't that a better place to be? And that's where the professionals go.
Yes. It strikes me as the conversation we're having earlier about audit and driving up the reputation and changing people's perceptions of what to expect from professional advisors. It comes back to the question: who is it who's going to educate our clients to help them understand that an accountant, an auditor can offer far more than just this compliance. And they're not just that person who comes 6 months after the end of the year and says, sorry about that, but well done.
Yeah.
But then, so it might be an education, but then we've also got to look at ourselves, haven't we? And how we approach life and how, do people really see that advisor relationship, which is the step-by-step looking forward, as I like your expression using the rear view mirror, that we can get sucked into the rear view mirror, because actually so much of still what we do, whether it's in audit, whatever, is based on historic financial information.
Yes.
I mean, just the nature of the name of that, historic. I mean, it doesn't give this real-time view. I mean, it is interesting, isn't it, whether auditors in the future, I'm sure it's happening in some places now, but actually you're plugged into a real-time link to client systems.
That's my next question.
And
is real-time audit a thing?
Spotting the anomalies as they happen and reporting it. It's not a thing for us at the moment.
Yeah.
I certainly think it's got to be on the radar. You just think, well, how could life be in the future?
Yeah.
And rather than these audits taking place in this block, 1, 2, 4 months after the year end, where you're doing all that historic.
Yeah.
But is it going to be the ability that you are linked in somehow permanently to your client's data feeds?
Absolutely.
And you set up things to the anomalies come through. Hang on, who posted the journal at 3 a.m. in the morning or whatever?
Right. So on a smaller and slightly different scale. So again, we look at our practice and we have a very clear technical roadmap for the next 5 years. And we've got kind of 3 core things that we're doing, and one of them is the mantra of everything real time. So at the moment, I think traditional firms probably do that much work at the year end. We probably do that much today, and we want to get it down to about that much, and more happening as those events occur throughout the year. So things like the anomaly detection. So that's exactly the kind of stuff that we're looking at the moment. Is that why would you wait till the end of the year plus X months to address that issue, when if you've got the systems in place, you can, that event can happen, and as an accountant in practice, you can take a look at it, pick up your phone to your client and say, hey, this is interesting, let's talk about it. Maybe good news or bad news, it could be either way. And I guess as an auditor, it could be the same thing. So something happens.
Breaking bad
and you've
news
got that opportunity.
Breaking bad news at an earlier time is better than a later date when you're saying,
Absolutely.
But what you're talking about there is exactly, a guy used a bit about saying it just drops out the bottom. So if you get your in-year stuff right, then fundamentally your end-of-year stuff does literally just drop out the bottom.
Absolutely.
So you're just shifting to a point where you're giving forward-looking advice at a time when it is valuable. Therefore, hopefully your clients will get to love you much more. And all that dry stuff where you were telling that they already, because clients have their own metrics for knowing what's going on.
Yes.
And actually, they might be a fact packet, but they're actually quite accurate at what they're doing. So if you can move it to that bit, you say, look, I think an anomaly just about to come over the hill, or it has broken on you, but you can take some action now. Isn't that a much better place to be?
Absolutely. In our journey on this, we kind of realise actually, so as a firm, we've got a team of accountants, and at the end of the day, they're the people at the end of the year who are going to prepare those accounts, put their name on it, and give it to the client and say, I have faith in these numbers, I trust these numbers, I've done a good job. So much so, I'm going to stake my professional reputation on it. And we're in this interesting position as being this kind of software company inside our own company. And what we need to do is surface data to our internal team of accountants in such a way that they can put almost blind trust in that data. So they need to have confidence in the machine and the system. So each time they're doing a set of accounts or preparing some year-end paperwork, they don't find themselves doing check upon check upon check of a system that has already done those checks. So this comes back to the thing about trust. So how can it be that, be it if you're using our software or somebody's sitting there using Xero, Free Agent, whatever the platform is that if that has done some piece of automatic work for you, how can it be that accountants in practice can have faith in that and trust it without then basically, bring up Excel and do the whole calculation by hand and so on and so forth? Because we're certainly not going to win in terms of the efficiency stakes if that's the case, because a check upon check upon check isn't an indication of a quality system. A quality system is getting it right in the first place and being confident that is correct. And that's a big human challenge that we've got to get over, is how can you deliver data to people in such a way that they can be confident in it and trust it.
And that's probably working as on an exceptions basis. You're always you don't worry about you talk about 80-20 in a different way earlier on, but it's back to you don't focus on the 80% that's right.
Yes.
You just learn to kind of know when something isn't right.
Yes, absolutely. Yes, and that's the kind of thing we talk about, which is, in building these systems, it's either got to be very confident that it's correct or put its hands up and say, I don't know.
Yeah,
right. There is no place for a computer system to guess and say, this looks about right to me.
Yeah. No, you're quite right. I remember, in the early days of having an office, if someone said to me, "Oh, I think that's about right," then my antenna went straight up.
Yes.
So you're just talking the machine equivalent, really.
Yes, absolutely. Yeah, you're absolutely right. Yes, instead you want to say it is right because this and this. Thank you very much. Yeah. Something I hear time and time again at discussions and panel shows is, okay, I'm here, I'm partnering in practice, I'm hearing what you're saying. But how on earth do I get there? There's all this great technology out there, but as a partner in practice, I don't quite understand it, let alone trying to figure out how I confidently advise my clients on this. But there's a very good chance there's people in your practice who do. And how can you start to engage other people in your firms and start to talk to them about what their ideas are for technology and changing service expectations? Because if there's somebody sat in your office in their mid-20s, there's a good chance that they're going to represent your customers' attitudes in the next few years.
Yeah.
On this last note, thank you so much for joining me today here at the Accountancy Age panel debate, and I hope you enjoyed taking part of it.
Thank you.